going on, everybody? Good morning and welcome back to Beat the Bell, presented by Kane Capital. Hope you guys all had an awesome weekend. Noah, good morning.
Alejandro, good morning. New month, new week, new quarter. Excited to get into it. Let's get after it today.
Saw your tweet this morning, stacked economic calendar. I believe we have a Jerome Powell presser this morning. That's going to be interesting to talk about it later on. Hopefully Sal will be joining us as well. We'll do that on Fed Forecast. Snipa, good morning.
Good morning. We got Mr. Jerome today. We got a sick Bet the Bell segment, and it's going to be an awesome day. I hope everybody had a great weekend. Let's get to it.
All right. So take it away, Diamond.
Yeah, like Alejandro mentioned earlier, we have a stacked economic calendar for this week. Let's go ahead and cover it. Starting today, we will have ISM manufacturing PMI at 10 o'clock. Jerome Powell will talk at a press conference an hour after that. This is not going to be like an interest rate sort of FOMC decision type of meeting. It'll just be his updates on current thoughts and where we are in terms of the economy, and maybe some hints on forward projections for economic policy going forward. So that will be today. Probably going to be the highlight of the week until Friday, but in between, we do still have quite a bit of news. JOLTS, job openings tomorrow. We have a lot of Fed speakers this week. I think we have like 6 or 7 Fed speakers this week, dropped throughout the week here. On Wednesday, we've got S&P Global Composite and Services PMI, as well as ISM Services PMI in the morning before a Fed speaker in the afternoon. Thursday, weekly jobless claims and 4 Fed speakers on Thursday in the middle of the day during market open. And then on Friday, we're going to wrap it up with NFP, non-farm payrolls, the unemployment rate, as well as a Fed speaker at noon. So definitely a heavy week as far as the economic calendar goes. Let's go ahead and dive into I mentioned at the top of the show, this is the start of a new quarter here with the first day of October. So today's going to be the first trading day of the final quarter of the year. Looking back at Q3, it certainly had no shortage of volatility and could potentially be what marks the top for the U.S. Indices in 2023. I'll pose that question to Alejandro and Snipes at the end here, but Q3 was initially off to a hot start out of the gate with the indices pushing higher, extending their spring rally, and the dollar pulling back near that $100 level. But yields did do a little bit of foreshadowing there in the month of July. Yields started to push higher there towards July as the rally started to sputter out there towards the end of July, and then obviously August and September have been pretty rough months for the stock market. If you look at our chart, I believe the S&P 500 down about 1.6% in August, 5% in September. The NASDAQ down 1.4%, 1.5% in August, down more than 5% in September. The Dow as well, red August and September. And yields have just continued to rally, right? We saw a massive blowout in the 10-year yield in September with an 11.72% gain for the month of September, as well as the dollar index also pushing higher across September and August. So we've talked obviously ad nauseum about how a higher dollar and yields pushing higher are going to be headwinds for stocks. And so as we head into Q4 here, that's definitely something that we're going to want to pay attention to see if yields, which did get a little bit of a pullback there towards the end of Friday, as well as the dollar, if they're going to continue to push those year-to-date highs, or if they will retreat, which should offer a little bit of buoyancy for stocks, I guess, and maybe we can look for a bounce in that scenario. The tech trade also cooled significantly in Q3, with Apple, the largest and arguably most influential stock in the market, falling 11% across Q3. Amazon lost more than 2%, and some of the other tech favorites like Meta, Nvidia, and Google squeezed out single-digit percent gains over the 3-month period. Elevated interest rates, which provide a risk-free alternative, and an ever bleaker economic outlook have put tech shares that fueled much of the rally for the first half of the year under significant pressure. So that said, do you guys think that the top is going to be in for 2023, or will Q4 provide fresh year-to-date highs for the indices?
Yeah, I think that we're going to make new highs. Obviously things haven't looked pretty, but seasonally, and we've been talking about this a lot, these 2 weeks to close September and then the first week into October is typically when we see that pullback. Now, keeping in mind that the S&P is still up a lot and having awesome year. So the pullback is pretty standard. Now, what we would like to see is some bullish price action in October. I think that the end of October is really going to be important for traders and investors to monitor. If things continue to look weak, because like I said, we have been tracking seasonally, and we should have prepared that chart for you guys, but we have been tracking perfectly. Everything is going exactly to plan. But now, into the middle of October is when we should see bulls start to step in. And if they cannot, then that would be troublesome for the market. And then I would start to believe that, okay, we may not make a new high. But if the trend continues and if the market does what the market is supposed to do, very big if, then we should make new highs into the end of the year, and the S&P should close up in a really good amount, and it should be all smiles into December.
I'll point out you made a good point there. Like even with the turbulent price action that we've seen over the past like several weeks and really through the month of September, I mean the S&P is still up 12% on the year, so it's not like this sort of pullback has been anything to really cause like a grave amount of concern. I think that people are just sort of waking up and looking, okay, especially with the way that we got to the highs, it was like very easy, smooth sailing sort of trading conditions. I think that people are starting to, I guess, notice the change in the tide and are starting to ask themselves, could this potentially be a situation where the top for the year is in and we wind up trading either flat to down for the rest of the year? Obviously, I think that a lot of that outside of the seasonality aspects that you touched on is going to matter, is going to be dependent on obviously how economic data comes in going forward, and if the Fed does anything unexpected, obviously with as far as interest rates or economic projections for next year. It is interesting how we do have quite a bit of the Fed and B, the rating agencies who wanted to downgrade U.S. credit. A lot of them talk about this Q4, Q1 sort of being that area where they would expect to see growth pull back and even potentially a recession starting. And it seems like, that's sort of been the narrative for so long now, and it keeps getting pushed back and pushed back and pushed back, that it's like the boy who cried wolf. Like we've been on the cusp of a recession for like 3 years now. And so I feel like it's tough to really hang your hat on that and say, okay, well, if growth is going to slow, then we're going to see, really tough trading conditions in the market. I think that, like Alejandro said, you got to kind of just look at the price action, especially as like day-to-day traders, look at the price action and really just sort of decipher for yourself. Okay, is this something that's, out of the ordinary? Or is this just going to be one of those pullbacks that ultimately will lead us into the next leg? But I'll wrap it up for us at Fed Forecasts. Pass it back to Alejandro.
All right, guys. The last thing I'll say here before we get into the system, this year in particular is very unique because last year's turbulent price action is still very fresh on the brains of traders and investors. And so typically during a strong bull market, when you do get that September, October pullback, traders and investors just kind of take it in stride. But there is that little bit of PTSD from last year, and traders and investors asking themselves, are we going back to what we saw last year, or is this just a small pullback in what is a new bull market? And again, I think that question is going to be answered for us over the next couple of months. So something to keep an eye on there. I'll go ahead and share my screen now, guys. We'll take a look at the system. Let's take a look at the S&P 500 chart, SPX. We have the 10 SMA in green and the blue 50 SMA on the 30-minute and 1 hour charts. So as we've been talking about, the past couple weeks have certainly been volatile. There was a change of pace from what we saw throughout the summer when the market was rallying hard, and we spent a lot of time above the 50 SMA on the 1 hour chart. But the past few weeks has certainly been a different story. Notably, last week, at the end of the week, we did get that relief bounce. And where did it fail? Right at the 50 SMA on the 1 hour chart, which is why it's important to be looking at both of these charts. Now, as far as trade signals are concerned, there are many ways that you could have traded this. You could have, of course, gone short at the 50 SMA on the 1 hour chart. It is coming down, sloping downward, showing us a visual representation of momentum in the market. But really, for me, it's just important to check in with the system every once in a while, whether you do it daily, a couple times a week, multiple times intraday, just to take a look at what's going on with these moving averages so you have a good idea of where that momentum is. And then understanding that even if you do want to take a long, for example, this relief bounce was a really nice trade to be taken. I took it myself, but then understanding that, hey, I can't expect too much from this long because we are still below the 50 SMA on the 1 hour chart, understanding that bears are still fully in control as long as we are trading below that 50 SMA. So now, of course, bulls are going to want to see a reclaim of that. We're going to want to see these moving averages start to trend higher, and we're going to want to get that confirmation. Bulls trading long have been getting burned for the past month or so because things have changed. The same thing or the same types of setups were presenting themselves through the whole first half of the year into early August until things finally started to change. And so keeping in mind that we're still in that short-term downtrend, we're going to want to see bulls start to generate some momentum, and then we can look to start to trade longs a bit more confidently into the end of the year. That's going to do it for the system. We'll pass it over to Snipes now for Bet the Bell.
Good morning. Let's take a look at the standings as we typically do when we start off here. We could see that we have some pretty good numbers. I believe that Diamond is in the top. We could see he's sitting at 67% win percentage, and then Alejandro is trailing right behind him, 61 wins. Money Mander, who unfortunately is not with us today, has 48 wins, 29 losses at a 62%, and then it's me. Let's go ahead and dive in towards our first question as typical. I'm going to go ahead and ask green or red. Again, last Friday when we all said green, and that is the kiss of death. We can notice that the market ended up going red. But I'm going to start this one off with Diamond Trades. What do you got for me?
Yeah, I want to keep stats on when we all have the same answer, because I truly think that our hit rate has to be like below 25%, like when we're all on the same side.
Close to zero.
The easiest fade like in the market, I'm telling you. But yeah, for today, I will go with green. I think that we can hold on to some green. We gapped up overnight on the news of a potential deal with the government shutdown situation. Erased that gap already, but we have a lot of news this morning, ISM, PMI, and Jerome Powell. So it can go either way, but I'm going to go with green.
Alejandro, what you got?
I'm going to go red here, and this is an important one for me because I'm losing ground on Diamond. I believe we were tied at one point. I'm a couple games back now. It's not looking pretty. I'm honestly on a little bit of a losing streak here. Have not been doing well on green or red. I'm going to go with red on the day. Really, really need this one to make up some ground, so we'll see.
Yeah, I'm going to have to go with red also. We have a lot of news. Interesting little fade here between Alejandro and Diamond. Nobody cares what I have to say. Next, we're going to dive into a very interesting question, and honestly, this came into my head a couple days ago, and I'm like, oh, shit, that's a good question for Bet the Bell. My question for you guys is, would you rather own a Tesla vehicle or would you rather own equivalent value in Tesla stock? Now, whether you want to go with the Model X at, let's call it 98,000, whatever you want to say. Would you rather own a Tesla Model X or would you rather own $98,000 worth of Tesla common shares? I'm going to go ahead and start this one off with Alejandro, who has previously mentioned that he is impressed with the Tesla vehicle.
Yeah, I mean, I like the car a lot. I like the stock a lot better. It's obviously the better financial decision to buy $98,000 of Tesla stock than.
No, wait. Let me stop you there. You're not buying it. It's gifted to you. Not sure if that changes anything.
It does. It actually makes it a lot more appealing because now you're telling me I'm getting $98,000 of maybe my favorite stock. So yeah, I'm still going to stick with that answer. Again, the better financial decision. What more is there to say? I mean, this is a finance show. I hope that nobody's picking the car, or else we're not really doing our jobs.
Diamond Trades, what do you got?
I'm going to go with the stock as well. I think because the thing about the car too is that like you have to service it, and cars are liabilities, and you have to pay for it every month. Even though you're getting it for free, you got to pay for charging and tires. And I don't know if you necessarily need an oil change in a Tesla. I don't know how that works. But regardless, it's still going to be expensive. And so I would definitely go with the stock. And I like the stock too, like Alejandro said. I mean, one of my favorites. Don't own enough, to be quite honest with you. So wouldn't mind a free 98,000 of it at all.
I got a bunch of Tesla stock already. And I got to be honest, every now and then I get a little bored. I think I'm going to
$98,000 Tesla stock is a ticket to retirement. Let's be honest. What's that going to look like in 50 years?
What's to say I don't already have that? What's to say I already don't have that?
So double it.
I mean, dude,
imagine saying I already have 100K in Tesla stock. I don't want another 100K in Tesla stock because
I didn't say that. I didn't say that, but I like when I'm here in South Florida, every now and then it gets a little boring. Like I don't have much to do, but I'll take that Model X and drive it like a go-kart up and down the highway. I'm not gonna lie. Probably not the logical answer, but
until the excitement wears off in 2 weeks, and then you're like, oh.
I mean, what's to say I'm gonna do that every day? I'm definitely not gonna be like in 2 weeks from now. It'll still be exciting if I did it every single day for the next 14 days too. Dude, I'll be doing donuts in the Model X. Come on, man.
All right, dude, take the car. All right. Next question, please.
All right. Okay, man. First off, I determine when we go to the next question. That's my job. Your job is to answer the questions. My next question is, which basket of stocks are you guys going to pick? It's one of those A, B, or C kind of questions. So in basket number A, we have Apple, we have Advanced Micro Devices, and we have JP Morgan. And basket number B, we have Microsoft, NVIDIA, and Goldman Sachs. And basket number C, we have Tesla, we have TSM, and we have Bank of America. Keep in mind, TSM, for those who might not be familiar, is Taiwan Semiconductors, and they make a shit ton of money also. I'm going to go ahead and start this one off with Diamond Trades. Which basket are you taking?
You said basket number B and number C, by the way, which I thought was hilarious. Outside of that, though, I will go with B. I'm going to go with Microsoft, NVIDIA, and Goldman Sachs. I think that we'll start last to first. JPM is the cream of the crop in terms of banks, and so you're taking like a little bit of a hit there, but it's not like Goldman Sachs is necessarily chump change. They definitely know what they're doing, and they make money in a little bit different way. They definitely have a little bit more of a focus on their investment banking side, and they're not as they don't make as much money on their consumer facing product, but still a great bank. NVIDIA, obviously, of the three chips that you have here, leading right now. I mean, the only argument that you could really make in terms of NVIDIA is that if you look at where the stock price is right now, how much of like the future of this sort of whole AI revolution, how much of that is already priced into the stock. Like that's the argument that you would really make against NVIDIA. I don't buy that. I think of the three, I would still want NVIDIA. And then when you come to the first ones, your Apple, Microsoft, and Tesla, I do like Apple the best of those three, but I think that Microsoft is definitely not a bad second pick. I mean, they are sort of at the cutting edge forefront of this whole AI revolution, and one of the best run businesses probably in the world. So I don't think, while like if it was just Apple versus Microsoft, I would probably take Apple. I think that when you look at these three baskets as a whole, I think I would definitely go with letter B, Microsoft, NVIDIA, and Goldman Sachs.
I like it. Alejandro, which letter are you going to take?
I'm going to take A. So in A, you have the greatest company on planet Earth in Apple. I really like AMD because this is one, and I know Diamond has been buying some AMD. Everybody's kind of expecting AMD to one day catch up to NVIDIA, and we likely won't see the ridiculous returns that we've seen in NVIDIA. But I think that AMD can grow to be an enormous player in the AI space as well. And then JP Morgan, the largest bank in the United States, that's kind of like the safety play, right? And Apple is also a safety play. I mean, Apple, amazing stock to own. So to me, that's the most appetizing answer. C is another good one just because of Tesla. I think that's probably out of the 3 tech stocks, out of the, well, not because AMD and NVIDIA are tech, but Apple, Microsoft, and Tesla, out of those first 3, that to me has the most potential upside is Tesla. But I think that provides, again, that sort of risky upside play in AMD, and then a couple really nice safety plays in Apple and JPM. So that's the most well-rounded of the 3 choices to me.
I will say too, like to your point on C, like if like AMD, NVIDIA, TSM all do semis, right? If they can all kind of execute the way that they have, that whole market is going to grow, and so all 3 companies theoretically should do well, right? Like maybe one will do a little bit better than the other, but all 3 of them should do well. Tesla, like you said, probably has the most upside of the Apple, Microsoft, and Tesla, just because of like where they are in their life cycle as a company, right? They're still a little bit newer. Microsoft is like and Apple are a little bit more mature businesses, and then Bank of America, I mean, that's one of Warren Buffett's like favorite. I think that's like one of his primary holdings. Like I think that's his favorite bank is Bank of America. So I could definitely make the case for C as well. I do like that. I'm not going to change my answer, but I did just want to point that out, give C an honorable mention because it's definitely worth talking about.
Yeah, and then until this year, TSM actually did make more money than AMD and NVIDIA until this year. I'm going to have to personally take A. Just like Alejandro was saying, that is a little bit of the safety there as far as Apple and JP Morgan. You're probably going to secure a little bit more stability on A. I personally think that, though, all 3 of these options, I could see somebody going down that road, and I wouldn't believe they're an idiot. Microsoft, just like Diamond was saying, Microsoft is also a very respectable company. NVIDIA is obviously the strongest semiconductor in today's age. So yeah, like there's a huge case for B and C, but I'm gonna have to take A. But that'll wrap it up for Bet the Bell today. I'm gonna pass it back to Hondo here.
All right, guys, thanks for tuning in. Like I said earlier in the show, hope you guys all had an awesome weekend and hope that you're ready to get things rolling this week. It is a big week. Diamond shared the economic calendar with us. Trade safe. Hopefully, some of this volatility that we've been seeing as of late is coming to the end of its life cycle, and that we will soon see better and higher prices in the S&P 500, because I think we would all like to see that, because that was a lot more fun than trading the downside. All right, guys, we're trading live all day in the Kane Capital Discord. You guys can go to kane-capital.com or scan the QR code. It's about to pop up on the screen. There it is. All right. Other than that, guys, enjoy the rest of your day. Good luck trading this week. Trade smart. Snipes, maybe need a couple more hours of sleep. And we will see you guys back here on Wednesday morning at 8:30 a.m. Eastern Time. Have a good one, everybody.